something huge is happening in the tech services industry, and it involves a multi-billion-dollar bet that's set to create a new powerhouse. The IT firm Coforge is buying Encora, a Silicon Valley AI specialist, and today we're going to unpack exactly what this massive deal is all about.
So what's the price tag for a move like this? A jaw-dropping $2.35 billion. I mean, let's be clear. This isn't just another acquisition. This is a massive, bold statement from Coforge, and it signals a huge strategic shift that's designed to completely reshape their future. So here's what we're going to cover. First, we'll break down the deal itself. You know, the nuts and bolts. Then we'll get into the why, the big strategic vision behind it all. And finally, we'll take a look at what this new, combined global force is actually going to look like.
All right, first things first, let's get into the mechanics of it. How exactly do you structure and finance a deal of this size? Okay, let's talk numbers. The total enterprise value is sitting at a cool $2.35 billion. And the lion's share of that, nearly $1.9 billion, is being handled through equity. These are the big, foundational numbers that really set the stage for this entire transaction.
Now, this isn't just a simple cash-out deal. The folks selling Encora are actually taking a pretty significant chunk, over 21% of the new combined company. But here's the real kicker. The big-time private equity firms behind them, like Advent and Warburg Pincus, they're not cashing out. They're staying invested. That is a massive vote of confidence in this merger's future, and they'll even get to appoint 2 new people to the board.
So, how long till this is all official?
Well, it's a 2-step process, really. First up is getting the shareholders to sign off, which they expect to happen within about a month. After that, it's all about getting the thumbs up from regulators, and that part of the journey usually takes somewhere between 4 and 6 months.
Okay, so we've got the how, but now for the really juicy part, the why. What is the master plan here? What justifies a multi-billion-dollar bet like this one?
Yeah, it really all comes down to one big question, right? Why Encora? Specifically, what is it about this particular company that Coforge thinks is such a game changer?
Well, Coforge's game plan here seems to rest on 5 big pillars. They want to get much bigger in the US market for starters. They're looking to seriously grow in hot areas like high-tech and healthcare. They need to expand their delivery centers closer to home in Latin America. And of course, it's all about landing more big-ticket clients and, you guessed it, improving the bottom line.
Okay, let's dive into that first point, the US market. You see, before this deal, Coforge had a bit of a blind spot. About 3/4 of their US business was concentrated in the East and South. This acquisition is basically a bridge to fill that gap, giving them a much stronger presence out on the West Coast and in the Midwest.
And just look at what this does to their revenue in North America. It's an instant, dramatic impact. We're talking a 50% jump, catapulting them all the way up to $1.4 billion. That is not a small number. It's a huge gain in their most important market.
And Encora is really the perfect key to unlock all of this. They're not just some random IT company. They are specialists in really high-demand stuff, like AI-led engineering. If you look at their profile, you see this intense focus on high-tech and healthcare, plus that crucial delivery network in Latin America. It's like they literally check every single strategic box for Coforge.
All right, so we've looked at the deal, we've looked at the strategy. Now let's see what this new beast of a company actually looks like when you put it all together.
You know, this side-by-side really says it all, doesn't it? Just look at the jump in scale across every single important metric. Revenue shoots up to $2.5 billion. The global team gets way bigger. And critically, the number of those really large, high-value clients grows substantially.
The new total headcount is going to be massive, around 44,000 people globally. But the really important number here is the addition of over 3,100 new folks in Latin America. That's absolutely central to Coforge's plan to build out their nearshore delivery options for clients.
And if you look at where the money is coming from, you can see how this move makes them so much stronger and more diversified. All of a sudden, high-tech becomes their single largest vertical, making up 28% of their revenue. This is a huge deal, putting them in a much stronger position in a super high-growth area, and it balances out their traditional strength in finance perfectly.
And this isn't just about getting bigger. It's about getting better clients. Look at the numbers here for their high-value accounts. The number of clients spending over $10 million a year with them jumps from 34 to 45. That's not just adding names to a list. It's about building deeper, more strategic, and more profitable relationships.
And the bottom line for all of this? Well, the new company is on track to hit a massive milestone, $2.5 billion in revenue by fiscal year 26. That officially cements their position as a major,
major player on the global stage.
So, there you have it. The strategy is locked in. The new, more powerful company is taking shape. But the biggest question of all, the one that's going to define everything from here on out, is can they actually pull it off? Can these two companies successfully merge their people, their tech, and their cultures to make this billion-dollar bet pay off? Well, that's the question everyone's going to be watching.